Everyone, welcome to my channel. I'm Doris. I'm here to share with you about market updates. The chain reaction of U.S. banking crisis emerged, and corporate bankruptcy filings rose sharply in the first quarter. The collapse of SVB seems to be a key to open Pandora's box. As the banks collapsed, there were signs of storms elsewhere in the U.S. economy. UBS said in a report that the chain reaction in the recent banking crisis has begun to show, and the situation may get worse. According to the UBS report, bankruptcy filings in the private sector in 2023 have already greatly exceeded the record highs in the early days of the new corona epidemic. The 4-week moving average and the private bankruptcy filings in late February was 73% higher than in June 2020. Matthew Mish, director of credit strategy at UBS, says that the difficulty of small and medium-sized enterprises may represent that the market has underestimated the credit difficulties of American companies. Smaller companies face the greatest pressure from rising interest rates, persistent inflation, and slowing growth. Standard & Poor's Global Market Intelligence also issued a warning on Thursday about the insolvency of U.S. companies. S&P examines the insolvencies of the public and private companies with assets of $2 million or more, and the private companies with assets of $10 million or more. According to the statistics, 71 companies in the U.S. went bankrupt in March, which is the fourth consecutive monthly increase and the highest monthly number of bankruptcies since July 2020. In addition, in the first quarter of this year, the number of bankruptcy filings in the U.S. reached the highest level since 2010. In the first 3 months of this year, a total of 183 large U.S. bank companies declared bankruptcy, which is the highest level in the same period in the past 10 years. According to UBS report, the industries most threatened by bankruptcy including real estate, healthcare, chemicals, and retail. According to data provided by the American Bankruptcy Institute, as of February, the number of monthly bankruptcy filings by American companies exceeded 31,000, an increase of 18% of the numbers of filings in February 2022. Bankruptcy filings by large corporations rose 83% year-on-year to 373. According to the S&P data, the industry that has been hit the hardest so far this year is the consumer discretionary industry, with a total of 23 bankruptcy filings, followed by the financial and healthcare industries, with 14 bankruptcy filings each. Adam Kobisi, founder of the media The Kobisi Letter, pointed out that the increase in the number of corporate bankruptcies in the U.S. is caused by rapid rise in inflation and interest rates. More than 20% of bankruptcy occurred in non-essential consumer goods and consumer staples company. These two industries are also the most vulnerable to high prices when inflation affects. At the same time, the White House plans to raise corporate income tax in the next few months, which may become a few nightmare for American companies together with tightening of bank credit. The collapse of 3 regional banks in the last month has some economists and investors worry of a broad-based credit crunch, a sudden and sharp slowdown in borrowing, which could push the economy into recession. Thorsten Slog, chief economist at private equity giant Apollo Global Management, pushed a report on Thursday titled "The Credit Crunch Has Begun." Slog cited a survey of 71 banks in the Dallas Fed area following the March 10 Silicon Valley Bank collapse, which he said showed a dramatic reversal in lending volume. Demand for loans fell for the 5th straight quarters as bankers report a deterioration in business activity. The Dallas Fed's monthly survey showed on Monday. The survey found that the decline in loan value was largely due to a sharp contraction in consumer lending. The Dallas Fed said one respondent said the macro impact of the bankruptcy of SVB Signature Bank and Credit Suisse, combined with the downgrades of several regional banks, has led to a crisis of confidence in our banking system. That's all I have today. Thank you for listening. Don't forget to subscribe and see you next episode.